What is up, guys? Welcome back to the Financial Journey with Coffee channel, and today's video is gonna be about StashAway. Well, what do you guess, right? But today's video is gonna be for those who are starting out or who are contemplating about starting out with StashAway, and you just find it really complicated. You've heard about investing, you've heard about the benefits of it, and you're just unsure where you should start, right? So I'm gonna walk you through step by step in the app of how and what the functionalities are. Now here you can see this is the portfolio that StashAway. Look at this. If you've chosen and invested since middle of 2017, you would have gotten 44% return back on your money already. So that just shows you the power of StashAway. But without further complications, let me pull up my phone and you can't see us. Okay. So guys, here you're seeing this is just a dummy account that I've created. So it's less than 5 minutes, guys. Use my link down below and you'll get a free 6 months of management fee. And towards this end of this video, I would also show you guys how to get 2 more rewards or referral for StashAway, even for those of you who have already been invested, right? You can use this, and I've used this, and it's amazing, guys. It saved me quite a lot of money. So now, when you first start off, this is what you get, right? They'll ask you a bunch of questions, and I chose the 36% portfolio. So here you have your home page, and over here you can create new portfolios, right? So over here, in a new portfolio, they would ask you whether you would want a general investing channel or direction, or a goal-based investing direction. Actually, if I were to put it simply, these two, general investing and goal-based investing, they do lead you to the same point, right? The general investing is basically you know what StashAway risk index you want to choose, and so you don't have to go through a bunch of questions, right? So let's choose general investing. And here, the two options here are, do you want a core investing or higher risk, right? So let's choose core. And right here, under the core, you have an option. So see the StashAway risk index, you have an option to choose from 6.5% all the way to 22% risk index, right? And you can't choose more because it's a core. They won't allow you to choose 30, 26 or 36% portfolio. So here you can see these are the StashAway risk index. And also as you scroll down, you can see this bar, right? This bar is basically its projection of how much you will get if you start to invest with them, right? So say, for example, this 14% portfolio, it will give me 50% chance by November 2050, which is basically 30 years from now, I'll get 1,200,000, assuming an initial deposit of 10K and a $1,000 monthly deposit, right? So if I choose a different risk index, so say like I go to 20, and you see now it goes up to 1.7 in the 50% risk index, so it's a bit more, right? So you could mess around and play with this and choose which one you want to choose, right? But I think what is more important is right here, this asset allocation. This is basically what StashAway would invest for you when you choose its individual risk. So let's start off with like 6.5%. You can see government bonds 38%. If you go to 10%, now government bonds is less, right? Fixed deposit slightly more. Now, if you go to the 14%, you can see equity sector, which is basically the US stock market. It's 25%, and government bonds is less, now 26%. So the general rule to keep here is the higher risk index you choose, right? The more the equity, or basically the stocks that they choose for you, right? The more the percentage of the equity. So for those of you who are beginners and you don't know what equities are basically stocks in the stock market, right? And then you have bonds. Bonds are basically usually government bonds, like here, right? It's more like fixed deposit where it's almost guaranteed. You'll get back maybe 2% a year, 1% a year, and it's really low. But with low returns come lower risk, right? Higher returns come higher risk. So that's what you got to bear in mind. So you can see, okay, let's just take the 22%, right? So you have 42% in the US equities, commodities, which is basically gold, 20%, fixed income. These are basically REITs, right? So those of you who know what the REITs are, they're basically real estate investment trusts. And then you have the international equities, which is basically international stocks. These are mainly in China. Then you have the government bonds and cash 1%. So for all stock portfolio, your cash will be 1%. Now let's click into one of them to see, right? Let's choose the equity sectors US. And when you click in here, you can see these are the 3 different ETF, exchange traded fund that StashAway invests for you, right? You can see IJR, XLV, which is the healthcare sector in the US, XLY, which is the consumer discretionary in the US, right? And over here, this consumer discretionary, you also have part of Amazon. So that's just something interesting for you to note, right? So this is just the general rule, and it will tell you, right, recommended for you to invest for at least 3 to 5 years, right? You can invest more, definitely, but 3 to 5 years for you to see at least a good return. Now let us go back. So you see, we went to core, right? So if we go to higher risk, you can see now I'm able to choose a higher risk profile, right? A 26, a 30, a 36%. So you can see that the 36%, the risk is way higher. You can see US equities 39%, international equities 33%. So basically, if you just add up both your equities, you're over almost 70% invested in just equities, right? And then you have 20% in commodities, and then the real estate, you have 7%. So yeah, this is basically what I like. I prefer being that I'm young and I don't need the money that I invest in. I don't need to pull it out. I would like to have all my or majority of my funds in the US or in the equity space, right? It could be the US, it could be China. I just want it to be in the equity space. But in all of StashAway's portfolio as of this recording, right? StashAway has put in 20% commodities, right? And that commodity is gold. So every StashAway portfolio that you invest in, have you ever thought about wanting to invest in gold? Well, StashAway is a good platform, and it invests 20% of whatever you put in into gold. So if you put in 100 ringgit, 20 ringgit would go into gold. And bear in mind, for those of you who are just starting out, StashAway has no minimum deposit. You can deposit any amount you want, and it would start investing for you. Guys, one of the biggest lessons I learned is the best time to invest is yesterday. The second best time to invest is right now. So those of you who are young, or maybe you think you're way past that investing age, just start today. Not so much because I want your referral or your fee, but this is something that will build wealth. It compounds, and I'm going to do a video about the magic of compounding interest. So I've just clicked on StashAway Simple, right? Now StashAway has two different funds or two different portfolios, as I could say, right? One is the basically what StashAway started with. Let's go back, which is this invest section, where it invests in ETFs and also commodities. Now StashAway just introduced a StashAway Simple, and what that fund does is basically it mimics a fixed deposit, right? But it's not exactly a fixed deposit. It's I forgot that word, but basically it's investing for you in a safe manner, right? And that you don't have to it's basically an income fund, right? And you don't have to worry about it. And it says projected you get 2.4%. Not much risk to it, I would say. 99% that this risk would not be more, or you would not get your money will not get wiped out, basically, because this is an income fund. And the income fund is pretty much like a unit trust, but I think I would even say it's actually safer, except for fixed deposit. You have a guarantee. This is not guaranteed. This is projected 2.4%. It could get higher, it could get lower, but generally the ballpark is around that case. And so those of you who are worried about whether it's Sharia compliant, StashAway Simple is also Sharia compliant. Now bear in mind, it's just StashAway Simple that's Sharia compliant and not the rest. So let's go down, right? Let's go down this home tab, and you can see introduce you StashAway Simple, and then you can keep your plan, right? Keeping plan, basically you could set a goal. So let's go back to our goal, right? So if we go to our goal-based investing, you could see there are several options here for you, right? You want to buy a home. Maybe you want to buy a home in a few years. You could click buy a home, and let's just go through one sample. Let's say I want to plan to buy a home maybe in 3 years time, right? 3 years time. Where do you want to buy this home? Well, let's just say, right, regional cities such as Kuala Lumpur. So let's just choose regional, since we are in Malaysia. For those of you who are watching, most of you are from Malaysia. Well, how many bedrooms does your apartment has or your house? Let's just put 3, right? And what kind of house it is? Let's just put like standard, right? No, don't want to go to too fancy. And what percentage are you expecting to pay as a down payment, excluding what you are planning to finance through EPF, right? Let's just say I want to put like only 10% down, right? 10% down. And savings that you already have towards this investment. Let's just say I only have 10,000 in savings, right? And now it says your goal, they have calculated for you that you need to save 1.3 million in 3 years. I don't know about you, but I think that's almost impossible unless you hit the jackpot, right? Um, and see, to achieve this goal, you need 30,000 to 34,000 each month to invest. Yes, okay, this is a bit out of the question, and I'm surprised that they actually just chose this. Looks like a 20% portfolio, because look at the government bonds. That's crazy. 32% government bonds. That's so high. Um, yeah, but that's StashAway, guys. I think because you need the money within 3 years, so maybe the risk calculation model shows that you can't take too much of a risk. So this is what they've calculated for you. But that's a sample, guys, of what a goal-based investing is, right? So you have buy a home, pay for your child's education, buy a vehicle, right? Budget for a wedding, start a business, funds for traveling, and so on. And you could look at the video, and they would explain a little bit more what goal-based investing is. And then once you deposit some money, when you go to your performance tab, this is where it will show you how much your total returns are, what your net deposit is, and what your value is, right? You can both see it in Malaysia dollar or the US dollar. And then you have the academy section, right? This basically tells you about the academy and what some of their courses, their live webinar that they have. Pretty interesting. I've never been to one of them. I've just listened to their podcast, but I'm sure for those of you who just are starting out, this would be super helpful. And then this transaction tab is basically once you've started investing, they would show you the breakdown of each of your transaction, right? So you can do general investing. If you've got multiple portfolios, they will show you multiple portfolios over here. And last but not least, guys, I want you to see this part, right, which is basically your promotion, right? How to enter promo, or what promo does StashAway have. So this is the video that I want to show you guys, right? When you've already invest in StashAway, don't worry about it, guys. First, for those of you who are Boost users, right? BOOST, Boost, right? That e-wallet Boost. Do you know that Boost, under the rewards section, if you can browse, scroll all the way to the end, you will find StashAway, right? StashAway is right here, guys. See, 0% StashAway management fee for 3 months, and all you need is just 200 coins. So you can only use this once, guys. I tried purchasing it twice and it rejected. It only allowed me to use once. But this is for new users and also existing users. So guys, redeem this. It's going to end at the end of this year, the 1st of December. Those of you who want to have used Boost, want some free management fee for 3 months, Boost is your way to go. Now, second, for those of you who are Maxis postpaid, go to the deal section, check out StashAway fee referral. Here, it's the same thing. For those of you who have invested with StashAway or has not started, this is a way better deal, right? But you need to be under Maxis, or your friends under Maxis, you can use it, right? Whoever. As long as someone that's under Maxis postpaid. And you can see, invest with StashAway to get $10 off grab rights and 3 months, no StashAway management fee for up to your first 50,000 invested. So guys, this is also going to end of the year. And so you use this and you get free money, free management fee for at least 3 months. So I hope that helps, guys. Just a brief walkthrough on what StashAway is and how you can generate your wealth. So those of you who like my video, click subscribe and like and share my video to all your friends for the StashAway management fee. So that's all I have for now. Thanks for watching and see you next video. Bye.